Some people think the whole gold's limited supply argument applies to Bitcoin too, but it's also believed that when Bitcoin hits that elusive 20 million mark, Satoshi Nakamoto reveals themselves, bursts into laughter, and poof, all Bitcoins vanish into thin air. That's what billionaire Jamie Dimon just predicted in his final Bitcoin forecast, emphasizing the potential government intervention if the bad use cases aren't addressed. Stick around until the end of this video, as there's some information Jamie Dimon probably doesn't want you to see. Now let's dissect this a bit. The CEO initially touched upon the stock market, urging caution as he questioned the assumption that everything is rosy, especially in the face of various global challenges in 2024 and 2025. From geopolitical tensions in Ukraine to terrorist activities in Israel, the Red Sea's quantitative tightening, and the complex dynamics of monetary policies, Jamie highlighted a mix of powerful forces that might influence markets. Here's where it gets interesting. Despite his cautious outlook, Jamie was probed about his stance on Bitcoin, especially after the recent approval of 11 Bitcoin ETFs. The interviewer wanted to know if JPMorgan clients could dive into this new investment avenue, and Jamie's response was a revelation. He made it clear that this would be the last time he discusses this on CNBC and declared blockchain as a real and efficient technology for moving money and data. However, Jamie drew a stark distinction between two types of cryptocurrencies. On one hand, there are those with embedded smart contracts, potentially having real-world applications like buying and selling real estate. On the other hand, there are cryptocurrencies like Bitcoin, which he somewhat humorously referred to as the pet rock, something that, in his view, does nothing more than serve as a speculative asset. In Jamie's perspective, Bitcoin's true value lies in addressing real-world issues such as anti-money laundering, fraud prevention, tax avoidance, and combating trafficking. He asserts that these applications contribute significantly to Bitcoin's use, emphasizing that the rest is essentially people trading and speculating among themselves. As we navigate the dynamic landscape of crypto predictions, it's evident that even influential figures like Jamie Dimon are wrestling with the uncertainties and intricacies of this rapidly evolving market. Now, moving to our final statement, we want to emphasize that we defend everyone's right to engage with Bitcoin as they see fit. Personally, we choose not to provide personal advice on Bitcoin involvement. However, from a professional standpoint, it's noteworthy that JPMorgan is actively participating in the crypto space. BlackRock has named JPMorgan as their lead authorized participant for the spot Bitcoin ETF, indicating a commitment to accelerating Bitcoin's adoption. Moreover, JPMorgan's use of Ethereum, with their JPM coin reaching $1 billion in daily transactions on Quorum, their private Ethereum-based blockchain, underscores the importance of observing actions alongside statements. Considering other financial giants like Fidelity entering the crypto realm, it's essential to understand that diverse opinions and market dynamics make this space intriguing. Now, let's address the pushback from CNBC host Joe Kernan, who brings up the comparison with gold. While gold's limited supply and historical use make it valuable, Jamie counters by suggesting that Bitcoin possesses the same characteristics that have made gold valuable for over 4,000 years. Amidst the banter, Jamie introduces a humorous yet thought-provoking scenario, envisioning Satoshi Nakamoto laughing if Bitcoin were to reach 20 million, sparking a debate about the hypothetical erasure of all Bitcoins. The discussion highlights the ongoing uncertainty and differing perspectives within the market. We encourage everyone to make informed decisions based on their understanding of the crypto landscape. As opinions vary and the market evolves, it's crucial to consider both actions and words from key players in the financial industry. Let's break down Jamie's perspective here. Now, Jamie might lose a bit of credibility when he suggests that one day Satoshi might come back and tinker with Bitcoin. The beauty of Bitcoin lies in its simplicity. It's just 5 lines of code. Not even Satoshi Nakamoto can force changes upon us. Unlike traditional banking with centralized third parties, Bitcoin operates on trustlessness. It's an open public code laid bare for everyone to scrutinize, which Jamie perhaps overlooks. Here's the thing Jamie might be missing. Governments aren't looking to ban Bitcoin. They are embracing it, holding it, and exploring ways to profit from it. The potential risk to Bitcoin could rise if the bad use cases like money laundering aren't adequately addressed. However, it's crucial to note that Bitcoin's transparency allows us to measure and understand its roles in such activities. Recent data indicates that while the US dollar is involved in $20,000 of money laundering, Bitcoin is only at $35. The historical currency of choice for money laundering has, in fact, been traditional fiat. Now let's shift gears a bit and let's delve into Howard Lutnick, the billionaire CEO of Cantor Fitzgerald, diving into the crypto conversation. And before I forget, make sure to hit that subscribe button for more updates like these. Speaking of crypto, let's quickly touch on Bitcoin and its potential for growth. Much like gold ETFs that gained traction around 2004 and stayed steady before surging, Bitcoin might follow a similar trajectory, especially when the halving event occurs. And here's a gem. Tether. It's a stable coin, and if you're into crypto, this is a company worth keeping an eye on. The CEO confidently asserts that Tether Holdings has the assets to back its claims, dispelling doubts around the almost $1 trillion market cap Tether has printed. So when the CEO says they've seen it and Tether has the money, it's a significant endorsement. Now delving back into Jamie's recent prediction adds an intriguing layer to the ever-evolving narrative of cryptocurrency. His envisioning of Satoshi Nakamoto returning to burst into laughter when Bitcoin hits 20 million may sound far-fetched, but it injects fascinating questions into the realm of hypothetical scenarios, particularly the potential erasure of all Bitcoins. Now what's more is that Dimon ties this unique forecast to the looming prospect of government intervention, specifically if the darker aspects of Bitcoin's use cases remain unaddressed. This narrative complexity further fuels the ongoing debate about the true role of cryptocurrencies within the expansive landscape of finance. Taking a closer look at Jamie's cautious stance on the stock market, it's clear that he's advocating for vigilance amidst a backdrop of significant global challenges anticipated in 2024 and 2025. Beyond the traditional market considerations, his concerns encompass a spectrum of geopolitical tensions, terrorist activities, quantitative tightening, and the intricate dynamics of monetary policies. Through this nuanced perspective, the CEO sheds light on the amalgamation of potent forces that could wield substantial influence over financial markets. This behind-the-scenes insight offers viewers a valuable glimpse into the CEO's genuine concerns and thoughtful considerations as he navigates the intricate financial landscape. Transitioning into Jamie's classification of cryptocurrencies, he humorously distinguishes between those housing embedded smart contracts and the seemingly inert, which he playfully labels as a pet rock, exemplified by Bitcoin. This classification isn't just a whimsical remark. It underlines Jamie's firm belief that the genuine value of cryptocurrencies lies in their tangible applications, especially when addressing real-world issues like anti-money laundering and fraud prevention. This perspective illuminates the ongoing metamorphosis of the crypto space, underscoring the necessity for a nuanced comprehension of its multifaceted nature. As the crypto landscape evolves, Jamie's insights prompt us to delve deeper into the intricate interplay between theoretical concepts and practical applications within this dynamic financial realm. And that wraps up today's video, and as always, see you tomorrow for more intriguing updates. Have a safe day.